What's New Zealand's response to Trump's 10% tariffs? No fireworks, no angry haka at the United Nations. Just a calm, collected, she'll be right, mate. Except we might not be fine. ASB's chief economist Nick Tuffley returns. He's the man with the data, the graphs, and the ability to ruin your day.
Financial freedom faster. Financial freedom faster.
If you like making money, rather than watching everyone else do it, hit that subscribe button because the numbers don't lie. More investors are getting the New Zealand property and real estate intel from this channel in 2025 than any other YouTube channel. Nick, let's unpack this 900 million gut punch to the Kiwi exporters. Are we going to see more carve-outs and exemptions for the tariffs?
Look, at this stage, although Donald Trump assures us that he's negotiating with about 100-odd countries, I don't think it appears that we're in the running to be negotiating quite hard for any carve-outs. I think from a New Zealand context, 10% tariffs, it's not great having any tariffs on our exports, but it is at the low end and it is relatively manageable. So $900 million and roughly in tariffs, which will be paid by US consumers, but it's sort of roughly, you could look at it as a $900 million hit to our export incomes. But put in comparison with about a $400 billion economy, it is livable, even though it won't be great for some of those individual exporters.
And Trump's saying that it is a little bit tit for tat, putting tariffs on New Zealanders because tariffs from New Zealand to the US is in play already. Help us understand, what tariffs are we imposing on the US at the moment?
Well, that's where this whole reciprocal tariff thing just seems to be so farcical, because instead of going through and having a look at what tariffs individual countries are charging on what goods, how do they compare to the tariffs that the US charges on the same goods, and doing a like-for-like comparison and going, okay, well, you're tariffing us a bit more than what we are on what we buy from you, so we're going to put a tariff in place. None of that. It was just simply based on a formula around, in a sense, if you've got a trade surplus with the US, so in other words, the US has got a trade deficit with you, they basically came up with a tariff which is supposed to basically turn that deficit into basically a balanced trade outcome. The view basically being that if there's a trade deficit there, it must be because you're doing something unfair to the US. So whether that's non-tariff barriers, currency manipulation, you name it. So it was a very, very simplistic way of coming up with a figure. Like for New Zealand, because we do have a trade surplus, so i.e. from the US point of view, a deficit, they're not exporting as much to us as they're importing from us. Now, we ended up notionally with a 20% tariff out of the calculation that they did, which they sort of discounted down to 10%. So, look, was there much science in it? Did they even look like they'd got ChatGPT to go through and do a proper assessment of everybody's tariffs? No, it looked like some pretty basic maths in a sense that they came up with. And that's where you've got these incredibly high tariffs being proposed for some countries that just happen to have a big trade surplus with the US, yet are quite poor countries. And of course, not to mention the penguin colonies that have been targeted as well with high tariffs, even though there may not be a person living in a particular place. They've still magically ended up with some tariffs as well. We'll find out over time exactly how things will be affected, and without sort of dodging the question too much, there's so much of that it depends on exactly what we are selling and where it fits into the end consumer product. So, the cliched sort of beef hamburger patty, if we're only providing a small amount of the actual beef going into the patty and then it's getting chucked into the McDonald's Big Mac, the impact in terms of what does it do to the competitiveness of our exporters to the US, it may not matter too much if the US consumer price doesn't change that much. So there's a lot of needing to see how things play out. And one of the challenges for the US is that you can't suddenly magically turn around and replace every single thing that you import with something that's locally manufactured. And that's the challenge that the US is suddenly finding, particularly with the trade that it's conducting with China, where there's so many things where it's going to be very hard for it to find immediate alternatives, and it may run the risk of having empty shelves instead. So what does this mean for New Zealand, and how are we going to see our trade likely shift over time? Well, first of all, whilst we may only be getting hit by a 10% tariff, who knows where things could end up in the future. We don't know who's going to succeed Donald Trump down the track. We don't know what he's going to end up doing. We are likely to be focusing very hard on building up our trade relationships elsewhere. That takes time, but at a company level, we're likely to have people looking very hard at going and exploring new markets. You're likely to have at a government level, New Zealand Trade and Enterprise, helping firms sort of gear away towards other countries as well. So that's going to help over time reduce our export market vulnerability. Just one irony, though, is that we've spent so much time looking at China and going, we've got all our eggs in one basket, let's diversify, and we diversified quite successfully to the US market. Now we're looking at how we can diversify away from that.
A reminder, money's not polite, it moves fast, and the people subscribed to this channel, they're already running past you. Thinking about it won't save you, subscribing might. So how are global markets shaping up at the moment? There's been sharp falls and rises, volatility's pretty present, and gold's at record highs.
Look, volatility is just there almost day by day because you're getting one utterance one day, some walk back of it another day, some new thing coming along another day. We've actually seen, quite unusually, a flight from US dollar assets. Quite often in a time of crisis, even if the US has caused it, like say things like the dot-com bust, you've often seen that sort of flight to safety, and it's usually been sort of the US dollar benefits because the treasury market is very big, it's considered to be very liquid, very safe. So you've often had people just want to go park their money in the US, or capital goes home to Japan, or it goes to Switzerland. This time round, look, it's been quite stunning, is that you've had not just people pulling out of US equities. Normally when that happens, you usually see people flip and put the money into US treasuries. So they're still holding the money in the US. What we seem to have seen is it's not just money coming out of equities, it's money coming out of the US bond market. It's flowing out of the US. So you've actually seen bond yields going up at times, and you've seen the US dollar weakening. And as I say, look, gold prices have been going up. People have been putting their money into other things outside of the US dollar. So it's gone into gold, it's gone into Bitcoin, because you're seeing this re-rating of the perceived riskiness of the US. And it's not helped by things that damage credibility, like Donald Trump threatening to somehow find a way to fire the Fed chairman, because that was seen in markets as potentially undermining the commitment to maintaining low inflation. And if you stop minding your inflation and allow that to creep up, well, from a bondholder's point of view, that's the kiss of death, in the sense that that's going to undermine the value of the asset you're holding. So credibility being cracked quite a bit in the US, and so that's flowing through to just weaker US dollar asset prices in general.
So New Zealand economy's just come out of recession. Is it going to continue that way? It's hard to tell. Historically, what's happened to New Zealand if Australia and the US goes into recession, deep recession even, which is, it could happen. What's going to happen to New Zealand?
Well, I think sort of step out and look at that in two bits. So first of all, what is going to happen with the global economy to start with? So our good friends at CBA, who have an international economics team, they've just come through and redone their global growth forecasts. So they're forecasting about 0.5% off global growth compared to their old forecast because of the tariffs. They're still looking at about 2.4% global growth. For the US, there is talk of the risk of a recession. I mean, their forecast, they've basically halved US growth down to not much more than 1%, but that's still quite a pullback. In Australia, they're still expecting to grow. So for us, recession or not, and some of our key trading partners, look, there's certainly going to be much weaker growth in the US. So that's going to have a ripple effect for us on top of the tariffs. And the big one is going to be China. And surprisingly, our collective group view is that China's still going to be growing at over 4%. It will get hit by the tariffs, but the Chinese government will just basically get a fire hose of cash out and spray it at the economy and try to offset some of the impacts on the Chinese economy as well. So we're still going to be mindful of those blowback impacts through there. So question mark, will there be a recession? Look, in some of our key trading partners, we don't think so, but certainly global growth will be slower. Let's say there is a recession. So what's going to happen in a New Zealand context? Well, first of all, we've just recently had the finance minister come out and give some hints at the budget that, look, they're not likely to be stepping up and boosting the fiscal stimulus. If anything, they're going to be trimming back government spending growth so that they can at least keep on top of the budget deficits a bit sooner. So we're not really going to get a lot of support from there. It will come down to the Reserve Bank really to respond to any material shock we get from overseas. And look, we already think that the Reserve Bank will now cut the cash rate to about 2.75%. So not too long ago, we were thinking 3.25%. We're a bit more convinced that the impact on global growth and particularly the impact on New Zealand inflation will be softer than otherwise. And that just gives the Reserve Bank scope to cut more. The worse the crisis gets, the more scope there will be for the Reserve Bank to cut. And that's something that's really important for us. We've got this shock absorber there when the cash rate's still over 3% at the moment. You have got a long way to cut it. And just remember that heading into COVID, the cash rate was at 1%. So it was way lower than what it was now. And there wasn't much room for the Reserve Bank to cut. It's got a lot more scope to cut if it needs to. So recession, hey, let's not get too concerned about it yet. We've got to see where the tariffs land. Second point is look, the Reserve Bank's still got a lot that it can do to support the economy.
Any parting words before we chat again sometime soon?
Look, I think at the moment we're hearing a lot of noise about Donald Trump, and obviously we're contributing it to it because who are we talking about? Donald Trump. But let's just make sure we put things into perspective where there will be so many industries, so many people where the impacts of what's happening are relatively minimal, and it's just more around a bit of outrage and entertainment over reading something online. So for many of us, we just need to focus on getting on with life and what we can control. And for those people who are exporting and importing, that's where the impacts are likely to be more likely. I think it's just really about being nimble and just keeping on top of things. And look, we'll get through this. We always do. But let's just make sure we keep things in the right perspective on the way through.
A reminder, every video on this channel is a tactical edge. If you own property, you want to own property, or you just hate falling behind, subscribe or keep losing to people who already have.